The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and you have markets in positive territory. Bad news this morning for the economy. It is good news for the market, as it appears, as you have the economy adding just 22,000 jobs in the month of August. June was actually revised to a negative month. On a 3-month basis, we're not even adding 30,000 jobs a month right now. In the context, we are now 12 days away from the next Federal Reserve meeting. All indications are they are going to cut by at least a quarter of a point. And yeah, how weak is this economy? Is there lag? Are they going to be cutting into growth? Are they already late to cut for weakness? Time will tell. But the market, we're taking it, and we're taking it to all-time highs. We live in remarkable times, folks, and let's get over to the headlines. And there it is. Hiring stalled as the U.S. economy added 22,000 jobs in August. Revised figures show a summer slowdown, 13,000 jobs lost in June on those revisions. And yeah, you check out this chart, check out the last four, and you may see revisions going forward for even last month where we were. On a wage front, wages go up 0.3% on a monthly basis, 3.7% year over year. Unemployment rate comes in at 4.3% as expected. And check out yields. Higher price, lower yield across the board right now, and that is a move, folks. We're up to 113.19 right now. We take a look at the yield curve. The 10-year, 4.07. We're down 11 basis points on the 10-year. The 2-year, 11 basis points. Now, there are a lot of cuts already priced into this market, but that's another additional half a quarter point cut already on a 2-year, on a 10-year, and we check out the chart. On a daily basis, nothing in the way of this thing getting to 114 and change, which is the highs we were in April. You back this up even further. This is the 10-year we're looking at. That's where we were in April. Your next stop at about 115 and a half. It's about 2 full points above where we're at right now in terms of where yields can come down to. And taking a look at the yield in particular, I just wanted to correlate it for you real quickly. There's your 10-year at 4.06. You know, not that long ago, folks, the 10-year was at 3.65. So don't be surprised if we are going to get a rip-roaring pullback right now, at least in the short term. That's only going back 1 year ago, less than September of 2024. So that's what we're talking about on the chart. Okay, you get that type of run, 2 more full points. The market was already 3.65 right now. You could probably make the case, at least in a shorter term basis, when you have the current administration trying to push for lower rates, all of that in focus, a new chairman coming in next May, there's going to be pressure on rates to go lower. The only thing that's going to prevent that is the risk, which is going too low for too long, overheating the economy and causing inflation. But yeah, that's the next stop right now, it looks like. And that would bring the 10-year down to about 3.65. That's where we were about. Pretty close to the same area we were in 2023. We back it up a little further than that. And as you can see, right, 115 to 116 about, that area. Looks like on the charts, that's where we're heading. So manufacturing jobs fell by 12,000 was in there. And yeah, we get the yearly revision on September 9th. It's going to be a big number. That one's already baked in, though. Could always surprise, but it is. Healthcare added 31,000 jobs last month. It was adding 42,000 jobs. And yeah, tech stocks, everything's trading higher this morning. Okay, so we have yields dropping. We jump over the dollar. Now, what's remarkable is we just pulled up on yields last September, right? Look how weak the dollar is. The 10-year last September was at 3.65%, and you still have the dollar at 100. The 10-year right now is still above 4%. We have the dollar at 97.60. You really get a move on those yields just back to where they were last September. That could bring the dollar all the way down to 90, folks. And on a longer-term basis, putting on monthly, there's your next technical stop. We were at 90 in the lows of 2021. You were at 90s in 2018. Not outlandish to think if we really get lower rates, the Fed cutting, that's going to bring some dollar weakness. And your next stop is the gold contract. And how about gold, baby? That's another all-time high today, folks. 36.44.90. You're breaking away from that 3,400 area. And there's your acceleration on that jobs number. We were trading about 36.10. We're trading at 36.44. We jump over to silver this morning. Catching a bit as well. Not quite over the highs that we saw on Wednesday. We're trading up 1% at 41.82. And let's jump around to some of the tech equities. You have Amazon shares barely in the green. They were in the red coming into that number. Quite a day yesterday for Amazon to the upside. Apple shares, yeah, basically flat right now. We jump over to NVIDIA. I mean, look at NVIDIA, right? We're $15 off the highs of almost a week ago. It's amazing how quickly this equity can just move 10% like it's nothing. NVIDIA shares, you're going to open $2 in the red this morning at 169.41. Meta had a good day to the upside yesterday, continuing that, up another $5 in the pre-market to $7.53. Yeah, Microsoft up $4. And Tesla. So Tesla, boy, Tesla's up $10 to $338. And, you know, I guess that's one way, if you're worried about keeping your CEO, is to offer him a $1 trillion pay package. $1 trillion pay package. The headline speaks for itself. I want to add commentary. You can add the commentary yourself. Now, this plan spans 10 years, okay? And you say, oh, it spans 10 years. It's $1 trillion, folks, as an employee, with a radical piece of ownership already. The other side of that is they need to keep Elon. They're arguing that they need to pay him $1 trillion as an employee to keep him. Sets a series of ambitious benchmarks he must meet to earn the full payout, including expanding the robo-taxi business, growing the company's market value to at least $8.5 trillion from around $1 trillion today. Quite a number, folks. There's a couple other things in there. Tesla, nonetheless. They think they're keeping Elon. They like that. They like lower rates. Tesla, going to be higher in the pre-market. We'll come right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We finished up the conversation with Tesla, and, rightfully so. You asked the question, what happens if something happens to Elon? What happens if he just decides no matter what, he's tired of the board, something happens? That's a risk that you're taking in this Tesla equity forever. I shouldn't say forever. Nothing's forever, right? It's going to be a long time until they materialize the growth aspirations that they and Tesla shareholders have built into this equity. And Elon is the leader of that. And this equity is not trading off fundamentals. It's not trading off the business they're doing right now. It's all trading off the future. And so, there is a risk if they lose him, and that's why you're seeing that type of package. But I feel the need to say that $1 trillion employee pay package for employee seems excessive if that's now going to be the standard because you're running such a large business that you demand to get paid. Folks, Tesla's only worth $1 trillion, and he wants $1 trillion to run it. Right? Now, he has to hit his benchmarks, okay? But run that scenario with every single public company out there, and CEO levels would go up, to put it lightly. Now, let's take a look at the price and volume on this thing. June 5th, you drive lower. I think that's when he had the public spat with the president. Important to note that he was not around for the powwow yesterday with all the tech leaders with the president. Probably would have put all the sunlight on him in that room with the president so you could understand why. But But yes, it's still a group of tech leaders surrounding the president, and Elon's not there. So that saga continues to play out. You trade lower, that was the volume, man. And you look at these volume numbers, that was a nice spike on August 22nd, but we got some selling in this equity as well. You know, you're in a consolidation right now. The other part I saw in here, where did I see the article? Let's see if we find it. No, it's Tesla and AI. Maybe it's on the front page of Bloomberg. So they're putting something to the... Let's see if it's right under this article on the front page. They're putting a vote to the shareholders whether Tesla can spend money with... Yeah, here it is. I mean, imagine these two articles. These two articles are the same day. He wants to be paid $1 trillion to be an employee of the company. And then, as an employee of the company, he wants to then use company money to invest in his private business. I mean, you have to take a step back, folks, and say, is this in the best interest of the shareholder in the longer term? Now, it's going to a shareholder vote. So, you know, hey, that's how it works. What's most amazing on this, though, is that the board made no recommendation on whether shareholders should vote for or against the proposal. Well, how about that for some real strength in leadership from the board? Seems like a pretty critical thing that you might want to voice your approval or disapproval of when you're coming to market with $1 trillion pay package and then asking shareholders, okay, yeah, let's get everything intertwined from the public company that you own and allow those funds, okay, to invest in Elon's AI startup XAI. With risk comes reward, folks, okay? So Tesla investors been rewarded handsomely on many occasions for taking that risk, but just be aware of the risk you're taking when you have that type of pay package, and then this one, which is, I think, probably even more problematic than a pay package, because guess what? The pay package, I don't think that we should start handing out $1 trillion employee packages, okay? But at least it's predicated on a goal in the future. Versus this one, where you can just siphon off money from a public company to the CEO's private equity. And yeah, you're going to be able to make the case in AI, folks. Okay, this is not like you're buying a bolt and a screw, right? XAI is burning through $1 billion a month. Tesla in focus. $1 trillion. All right, we got 6 minutes to go until the opening bell. We got the S&Ps. Going to open in record territory, up by 25 points right now. We keep our eye on yields as this market digests a weak jobs number. And yeah, some of the equities moving they're talking about in the den. And Lulu caves last night on their earnings, caving this morning. And look at this equity, right? Let's go back. So you're going to open at 165 right now. The COVID lows were 128. And you got highs out here from 2018 of about 165. Look at that. Oh, giving back 7 years like nothing. Right back to the highs of 2018. You know, you're at 165. You break through that area, and you're probably trading down to the lows we had in December of 2018 when you had a little bit of a taper tantrum in the market. If you recall the Fed, they started to hike, right? A little taper tantrum. Market pulled back dramatically going into Christmas of 2018. I'm dating myself because I remember it well. And then the market said, no, we're going to take off to the upside. But you have some volume down there. You got some volume, of course, at the COVID lows in March of 2020. But a similar area, 127, 125. You got lows out here of 110 in December of 2018. But yeah, Lulu. We're down 15% on the open. Nike trading a little bit lower on Lulu numbers yesterday, but you're only going to be down about $1 right now. Let's jump us around some retail. Walmart shares slightly We'll call it flat with a bid-ask right around where we closed yesterday. You jump over to Target shares this morning, trading flat as well. Let's see how the banks are doing with some action and yields. JP Morgan, down about $1 coming into the open. We jump to Bank of America shares. We'll call it flat. No, we won't. Yeah, we closed at 50.34. We closed at 50.30. We'll call it flat. So bank's pretty much flat. And we're going to get some action. We'll see which way. But yields trading lower. And we'll go over some of the Fed probabilities when we get back, folks. You got the 10-year. How about pushing 4.07? There was a line in the sand at 4.2. We just blew through that, man. And as I mentioned, you don't have to go far. This area from last September, folks, that 10-year was down at 3.65. Seems amazing. 3.65. Let's go. Bring it on. Let's get a mortgage. Can we get a mortgage rate with a 5 handle? All right. And you know what? That gets my brain going. Let's check out the home builders when we get back. You get it. Lennar going to open up $3. These home builders, man, they're all about those rates. Coming back, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks, and look at this weekly bar we got going on Lennar. All right, Lennar, that's the weekly, but today you're up by $3. Let's go back to the daily, and you can see it's been quite a week. Look at that, man. Yeah, we kick it off Tuesday, Wednesday, Thursday, Friday. Lennar up almost 10% from where we opened this week, folks. D.R. Horton. Talk about an acceleration from 120 in June over a 3-month period. We're up 50% to 181. KB, look at that weekly bar as well. Today we're up by 2.6% right now. We check in on yields. That's quite a weekly bar on the yields. Pulling back a bit, we're all the way up to 113.21. We're back to 113.15 right now with your 10-year. We check in on the dollar. 97.71. We hit 97.51 earlier, and gold catching a bid today. 36.33. Hit an all-time high at 36.44. And yeah, checking in on Lulu, down by 20%. Boy, look at this market, man. So NASDAQ 100 within about 200 points of all-time highs on the futures right now. We're trading up 202 points, up 0.9%. Dow up about 0.3%. We take a look at the heat map. No, that's not correct. That hasn't uploaded. Let me see. Yeah, Amazon down by 0.5% right now. You know, sometimes when I have this up, that is not. Maybe I jump around. No, it hasn't updated from yesterday. I don't know what happens with that heat map occasionally when I have my charts up all night. Come on, Thinkorswim. Let's go. Get it going. Look at the Dow. 30 points away from all-time highs on the Dow right now. Whew, Dow's up 320 points from where we were at 8:30 this morning. Initially, the market said maybe bad news is bad news, and you had equities trade a little bit lower. But it seems like bad news is good news. You don't fight the Fed, folks. Yeah, look at Home Depot up by 1.8% right now. You jump over to Lowe's. Home stock's up by 1.7% right now. And boy. So we're flirting with a 10-year that's approaching 4% right now. Historically, 30-year mortgages, residential mortgages, have been about 2 percentage points above the 10-year. There's a lot going on the longer-term curve. There's a lot going on in the fixed income spectrum right now, let alone with markets. But whether you're talking about the Fed cutting, but then you're talking about the curve, the steepening of the curve, the long-term rates actually going up while you've had the short-term rates. So, but historically, mortgages have been about 2 full percentage points above the 10-year. We have a 10-year approaching 4%. I just brought up that we had a 10-year that was at 3.65% in September of 2019. We were above that area in 2023, too. Trying to remember how many times this market has gotten ahead of itself thinking that the Fed had hiked and they were coming back to cut dramatically. Well, we found out very quickly on a couple occasions that was not the plan, right? And here we are yet again. This time it feels a little different, though. Okay, that jobs backdrop, yes, it can shift. I don't imagine the Fed's going to get too far ahead of themselves right now. It's the unemployment rate is 4.3%. So keep that in mind as there are radical calls for, 200 basis points of cuts from the president, right? They're going to try and proceed with caution here. But we were at 3.65%. And you ever get mortgages down to a 5.75? Whew. We're not even near that on a residential spectrum right now, folks. And this market has held up very well. And you get 30-year mortgages down to a 5 handle. Now, the long portion of this curve has struggled, okay? And you don't have to go off the 30-year. The 10-year is usually, historically, the one that's mattered the most. And boy, we got movement in that, okay? The 2-year is what's reacted most to the Fed, right? You take a look at the 2-year. Look at the 2-year compared to where we were last September. If it was all about the Fed, the 10-year would be where we were last September, which is 3.65. So that's the risk in jumping in with the home builders, the 10-year, okay? The Fed is going to cut. But we may have a problem when you go to the 10-year and the 30-year. Because there's your 2-year. There's your 10-year, where you're 2 full points below where you were in September. And there's your 30-year. When the 30-year, so imagine, if you went out duration, right? If you decided to buy the 30-year last September, you were buying it at 127, and you lost almost 10% of your capital. Okay? 10% of your capital, your equity, you lost by buying the 30-year last September because the 30-year has risen so dramatically. If you had bought the 10-year, you only lost, 2 points out of 115? So 2%. And if you had bought the 2-year, you're flat, actually, because 2 years right where it was. Okay? So the momentum is going to be for rates to be lower. But remember that quick analysis, because the 30-year right now is well off where we've been in terms of higher yield. And you just had a government pass a spending plan that's going to add $3.8 trillion over 10 years. Market forces do end up mattering, folks. And yes, I'm always hopeful that you pass budgets that you think are going to add trillions, but there's enough growth in there that that's not how it works out. But that's a pro forma spreadsheet. And, I was listening to Bloomberg yesterday, and for those that have been following the gambling taxes and the big beautiful bill, right? So what they did was they said you're only allowed to offset 90% of your winnings as deductible. Did I say that right? No, your losses. Yeah. As in, you can only offset your winnings with 90% of your losses. And basically, that's phantom income. So imagine you bet $100 on a blackjack hand and you win. And then you bet $100 on a blackjack hand and you lose. You're left break even. Okay? But the government says, well, no, you won $100 and you can only deduct 90% of those winnings, so you're left with $10 of winnings that you have to pay taxes on. It's phantom income. So there is a bipartisan effort, and I'm sure this will get talked about, because it's tantalizing, because it's gambling, because it's Vegas. And what's remarkable, though, is it was put into that bill, not by accident, okay? It was put into that bill on purpose because, why? Because it created extra tax revenue. But you go down the line, and that tax revenue now, that's going to be taken out, right? And so that is part of that equation, that you put things in like that, you score it in a way that certain things aren't going to get renewed, and they may. We'll be right back for the market, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps up by 28 markets. Record territory in the S&P's record territory on gold. We have the 10-year pushing a price level that we have not seen in some time. You jump around to some of those gambling stocks. DraftKings up by 2.5% right now. You talk about a roller coaster, up from $29 back in April. And yeah, so talking about the gambling tax, the reason I'm making this explanation is because my opinion is it was put in there because they had to find areas to try and raise tax revenue, right? You're cutting taxes dramatically. You had to find a way to try and raise revenue. And one of those ways was phantom gambling earnings, okay? Now, that's hopefully going to be done away with. And it should, folks. It is going to create every sports gambling website. No one's going to gamble on DraftKings, just to tell you how big this is. Nobody, okay? If you're making, the people who get hit the hardest by this are people who could be making a lot of very small bets, right? Imagine if you're betting $3 or $5 a game and you bet like 10 games a weekend. All right, $50, that's your expense. It's fun. You go hang out with friends. You $50 a week is what you bet 10 games, okay? Well, folks, you're going to bet $50 a week. And let's just say you break even, and then you lose $50. You win $50, you lose $50. Every time you do that, you're creating $5 in phantom income that the government's going to get reported to by these gambling institutions. Why would you be doing that? Can you imagine? So you're going to be a net loser most of the time at the end of the season, and then you're going to get a tax bill most of the time because you can bet so often if you're betting small amounts. So hopefully they're going to take that out. They're going to fix that, right? Let's assume that the government will do the right thing and they'll fix that. They won't tax people on money that they're not making, because that makes no sense whatsoever. I think we all agree with that. I think they're going to get reported, though, Duffy. That's where this is going to be a problem for the gambling institutions themselves. You know, they're running financial operations for gambling, and they have the financial reporting to report the earnings that you're making. So you're going to get reported. This is going to happen. And that's why I think that they'll fix this, okay? Because it's going to be way too big of a headache, and it will force you to bet on with a bookie, bet offline, right? All that stuff, okay? Now, so what's going to happen? So they're going to take that part out of the big, beautiful bill. Do you think they're going to balance it? Do you think they're going to raise taxes somewhere else, or going to make cuts somehow to offset it on another way? No, they're just going to fix it, okay? So what's going to happen? The bill's going to be more costly than you thought. And it's important to focus on this on the day you get the jobs. The Fed's going to be cutting, but we're talking about yields. And yes, the 10-year is going to be under pressure, folks. As somebody that's in real estate, look at those home builders, okay? Rates are going down right now. But there's a risk on a longer term basis, okay? And you look at the deficit impact. This was a great one I found, okay? And what this chart is here is, okay, is this is what's expiring, right? The sunset provisions of what's in this big, beautiful bill. And the reason why it was structured like this, and this is what there's a reason why that tax was, it created phantom tax earnings, okay? So some of the items which are sunsetted in this bill, so they don't have to account for them when they score it, okay? There's no way that any politician is going to let these sunset. The tip wages, I think we're all on board. We should be, okay? Tip wage deduction. All of these in blue here sunset in January of 2029. The overtime bonus deduction sunsets. The auto loan interest, who's going to be the politician that wants to make sure that people can't deduct their auto loan interests, right? Not happening. That's going to get extended. Senior deduction, even more important. You know the senior deduction is going to get extended. Manufacturing, is manufacturing important right now? Okay, the Trump accounts, the $1,000 contribution, all of those get sunsetted in the bill, but there's a great expectation that they will get continued. This is the deficit impact of those sunset provisions, okay? What's going on is the full expense from manufacturing structures, about $30 billion. You look at the senior deduction alone next year, it's going to have a $23 billion impact. The point is, folks, all of these are going to get pushed forward. They don't have to account for them in years 2030, 31, 32, 33, 34, because in the bill that they're passing, they say, we're just going to do those for a few years and then they're going to go away. Okay? If anybody ever walked you through this in like a college paper, right? If a student was like, listen, this is how I'm going to run the government. We're going to pass this bill. And I'm going to tell everybody that we're only going to do these things for a few years, but everybody kind of knows that they're going to go on anyway, right? And that way, we only have to calculate the costs of these plans for the few years included. Meanwhile, we set the precedent that they go forward, but you don't have to actually account for the math of what the cost is for running those programs in perpetuity, which programs like this, folks, you can make a case that some are going to sunset. Okay, and things do sunset. No politician is going to sunset senior deductions, auto interest, tipping, and overtime. And they're a huge portion. And in manufacturing, we probably shouldn't. We need manufacturing, right? Why not? So when you're thinking about the longer term yields, okay, remember the numbers of 3.8 trillion, okay? That's what we're talking about adding over 10 years. There is pressure on a longer term perspective. Be careful going out that far. Now, thankfully, mortgage rates are predicated off the 10-year and not on the 30-year. And that's why, you know, in a long-form answer, these home builders are catching a real bid, man. You're seeing it again today with Lennar up by 3%. As the 10-year has quite a move. That's your daily. And on a weekly basis, you're pushing the highs of April. And it looks like we're heading to this area of 115.15 would be my guess. And in terms of where the Fed is positioned right now, the conversation has now shifted, folks. And these probabilities, I've been showing you them, there's no longer the probability that the Fed stays where they are. These probabilities have now shifted to 25 basis points of cuts at 84%. And 16 percentage point of 50 basis points of cuts, right? Let's go out to December. Whew. Okay, so 3 cuts is 63%, and the market actually assigning an 11% probability that we get 4 cuts over the next 3 meetings. The pressure is on Chairman Powell as if it wasn't on enough. 63% chance we get 3 cuts, and an 11% chance you get 100 basis points of cuts by the time they meet in December. It's on, baby. Amazon in the red. Apple shares up 0.2%. Google shares up by 1.2%. Nvidia down by 2.1%. Nvidia struggling. Gold up by $42. We just hit another all-time high. We're coming back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And yeah, Jobs Friday, 22,000 jobs added. And you take a look at it, right? We got the unemployment rate at 4.3% right now. You have jobs, 22,000. On a 3-month basis, you're talking about a number that is dim. We've been under 100,000 for 4 straight months. And June actually has a negative number in terms of jobs added, minus 13,000 after revisions. Remember, we do get total revisions for the year coming up next week. And let's talk a little bit of Apple to finish it up. So Apple, they have their big event going on next week as well, September 9th, Tuesday. And they'll be talking about the iPhone 17 Pro, the Pro Max. They're going to have new backs. They're going to have an all-new model called the 17 Air, an ultra-thin body. AI is going to be in focus here, and that'll be Tuesday, September 9th. New smartwatches, other peripherals, and that's the biggest product launch of the year. Now, it's amazing that I'm still working with the 12 Pro Max, folks. Still working with the 12 Pro Max. The battery's suffering a little bit, okay? But I've had that now for 5 years. It's a great phone. A year ago, when they were talking about the 16, I said, it's time, folks, it's time. It's amazing how quickly it's not time. These phones, maybe you're going to get that rejuvenation right now with AI, and that's what Apple's hoping for. But it hasn't materialized yet, folks, okay? And part of this run-up last year was having to do with the fact that, hey, guess what? We got a 16 coming. You're going to have to need to use better phone for the AI capability, and it just hasn't translated yet. Yeah, I'm right there with you, Duffy. 6 years. I might be cutting out a little early, but I'm proud of myself. I made it 5. And, man, my phone gets some uses. With a 4-year-old in the house, I think before I had Tommy, I think I might have had 500 photos on my phone, and I probably have 30,000 now. And Apple's making, where they're making money, though? On the cloud. They are making money on the cloud because I got to store all those pictures now. Folks, thanks so much for being here on your Friday morning. 11 Pro Max. There you go. You guys got me by a year. Folks, have a great Friday. I'll see you back here at 3 o'clock to close out the week, but stay tuned. Basil Chapman's up next. Steve Rhodes at 11. Larry Pesavento at 1 o'clock. Have a great Friday.